To keep you updated on the capital and financial markets, here is a recap of what happened.
Fund managers have been snapping up government bonds after a brutal sell-off triggered by the Iran war, as they bet that the market's focus will shift from inflation fears to the likely hit to economic growth from the conflict. Big investment firms including Schroders, Manji Investments, and JP Morgan Asset Management have added to their holdings of debt as yields hit multi-year highs, in the belief the returns now on offer do not account for a probable weakening of growth that could require future interest rate cuts and trigger a bond rally. We think the market is underpricing the probability that central banks will have to cut interest rates further out in order to offset the growth shock, said Ben Nicol, a senior fund manager at Royal London Asset Management, which has been buying 3 to 7 year gilts in recent days. Rapid advances in digital technology are opening new avenues for financial crime, with illicit funds increasingly channeled through cryptocurrencies. The decentralized and online nature of these assets makes them difficult to monitor and trace using conventional methods, posing a growing challenge to enforcement agencies. The situation is further complicated by the pace of cryptocurrency technology, which continues to outstrip legislative and regulatory developments. This has left enforcement agencies struggling to keep up, often reacting rather than implementing preemptive measures. Wars cause large and persistent economic losses in countries where fighting takes place, with output declining by roughly 7% over 5 years on average, and economic scars lasting for more than a decade, the International Monetary Fund said in research released on the 8th of April. The IMF examined the cost of active conflicts, now at the highest levels since the end of World War II, and the macroeconomic consequences of sharp increases in military spending in 2 chapters of its forthcoming World Economic Outlook. The full report will be released the 14th of April. Investors have warned that the conflict in the Middle East will leave scar tissue in global markets, with commodity prices and bond yields unlikely to quickly return to pre-conflict levels, even if a peace deal is reached. Energy prices remain far above pre-war levels even after the US and Iran announced a 2-week ceasefire on the 7th of April, with investors saying that damage to Gulf infrastructure and the loss of confidence after Tehran's de facto closure of the Strait of Hormuz will weigh on a recovery. It goes beyond the reopening of the Strait of Hormuz. I think there would be longer-lasting scar tissue that would need a higher risk premium in markets, even if a permanent ceasefire was agreed, said James Vokins, head of core income and investment grade credit at Aviva Investors. The Securities and Exchange Commission said its move to allow umbrella funds, investment companies that house multiple sub-funds under a single legal structure, is meant to simplify participation in Philippine capital markets. The rationale behind the umbrella fund is to make things easy, SEC Chairman Francisco Edralin Lim told reporters on the sidelines of an event on the 8th of April. The mutual fund industry is a key stakeholder in our capital markets because they're the ones buying, he said. If the institutional investors are few, if the retail investors are few, I think that's one of the reasons why our market is small. Read the latest issue of the e-Zine available at FIMM's official website to stay updated about what's going on in the industry. Watch the latest episode of Coffee Talk to find out about what is going on in the industry, exclusively on FIMM's official YouTube channel.
This has been the FIMM TV Weekly Recap. Be informed, stay updated, be sure to like, share and subscribe.